This is your Mortgage Rate Watch for Wednesday, June 15th, and I'm Keith Akada with the Mortgage Reel. Another inflationary report comes out from the Consumer Price Index this morning, which was way hotter. In fact, it was the largest monthly increase in 3 years. So that does show inflation has heated back up. Now, again, this goes back to what Ben Bernanke has just mentioned from his earlier speech, is that inflation is transitory. Well, the entire stock market right now is questioning that. Is inflation really transitory, meaning temporary, or has it really already kicked in? That is going to be a question that is yet to be seen. The New York State Manufacturing Index came out, and it's one of the bigger falls in the month of June. And what this really shows is overall the economy itself may still be slowing. Now, it's very interesting to have inflation and at the same time have manufacturing going down. And this does go back again to where oil prices were. Well, with oil prices softening, it's going to be interesting to see what's really going to happen with the economy over the summer months. Now, overall, if you reacted to what happened with inflationary concerns with the reports yesterday, we saw the bond market take a huge sell-off and it pressured interest rates higher. Now, with that said, why are we having, if you look at the bond page, the interest rates getting better and improving? Well, this is really concerns coming out of Europe, the Prime Minister resigning, and still their debt problems not anywhere close to being over. In fact, they said they won't have a bailout package for Europe until July. So this really means that they're still not out of this. There's a lot more coming down, and then what this has really begun to do is take the safe haven trade of the United States back into U.S. assets, denominate assets like the bonds and the mortgage-backed securities. So this is definitely helping. If you look at the right-hand side of the bond page, you're going to see that we're getting a big improvement, basically making us to where we started the day yesterday before the announcements of the economic data that came out to show its signs of inflation. So the key thing here is what's going to happen should we see any positive developments come out of Europe with signs of inflation coming from our local economy. Well, if we didn't have what's going on with Greece right now, we would definitely be starting interest rates again higher today. But again, with the tug-of-war battle of what's going on with the bond market, we're seeing interest rates being pressured lower because of the influx of money coming into the U.S. safe haven trade from the concerns over the euro. So this is a positive day for the bond market, but definitely something that shouldn't be overlooked, because if you're looking at the U.S. data with signs of inflation, keep in mind, anytime you hear inflation in media that's being announced, you can almost guarantee that day interest rates moved higher. Make sure to leave any comments, feedback, or questions below. We'll make sure from Team Mortgage Reel to get back and answer those as quickly as possible. We have a special request we'd like to make before you leave, and hopefully you've enjoyed today's clip. Make sure to check on the home page. Click on the banner at How to Beat the Banks, and that'll take you directly to our Facebook fan page. We definitely put out more and more information and to create transparency in the financing process of home ownership. We're big advocates of home ownership, obviously, but we want to make sure it's as easy as possible to understand what's impacting and the education necessary for home ownership today. And when you're visiting us on Facebook, make sure to like us when you're there. Thanks for tuning in to your Mortgage Rate Watch. We'll be back with more news impacting your largest investment, your home.